Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us at the MarketSite studio, we have Greg Kammerer. He's a Portfolio Director at Altrius Funds. We also have Jim Russo, Portfolio Manager at Altrius Funds, and they are here to discuss their newly launched income ETF, ticker DIVD, DIVD. It's great to have you both with us. Welcome to MarketSite. And what made you decide to launch this particular ETF?
Well, we founded Altrius 25 years ago, and we've been always focused on income as part of our strategy, along with growth. And we thought it was important that we give to institutional investors the ability to have an ETF wrapper to make it easier for them to invest.
How does your approach in dividends differ from other types of strategies that are out there?
Generally, when you see some dividend or income funds out there, you focus on either dividend growth or just reaching for dividend yield. So our process is we believe we can provide investors quality yield plus quality yield growth, really setting us apart for a sustainable dividend for our investors.
So how stable is the dividend?
Very stable, and we focus on companies where, I talk about it in my book, where we're not reaching for yield. And you want to have companies that if they have a tougher earnings season, they're continually growing their dividend. So we're very rarely worried, and we're constantly stress testing for our portfolio to make sure the dividend is there, because we know our clients are coming to us not only for growth, but also and value, which is what we focus on, but also to get that dividend income and an increase in the dividends.
How about global investing? How does that impact dividends? Is it more risky when you look to overseas?
Generally speaking, we think that our approach to global investing is de-risked in the sense that we're not in emerging markets. We're in developed European markets mainly that sell heavily into the United States. So you get developed countries, and that gives us a chance to still have good, stable businesses that are trading at cheaper prices from a PE perspective, and ultimately have higher yields that are sustainable. So while there is more risk a little bit, we don't think it is as risky as some of the emerging market sectors.
So let's talk about the geographic breakdown in the portfolio. How much is based overseas and how much is based in the U.S.?
Yeah, it's about 50-50, but we don't look at where a company's headquartered. It doesn't really matter for us where the company's headquartered. It matters where the revenue's coming from. So even though there are international companies we're investing in and U.S. companies that we're investing in, our geographical distribution is very broad and wide and diversified in that sense. So, we talk about our investment committee meetings, what impact is this going to have on how many Pepsis are consumed in India or how much Nestle chocolate is consumed in Latin America. And if the answer is very little due to whatever the fear is of that particular day, now being, of course, inflation, then we don't worry about that. We're focused more on the earnings and earnings growth and dividend growth and yield. So
the geographical location where it's physically located, is that just ignored or irrelevant to the selection process?
Pretty much. I mean, it's not important. And the places we're invested are all stable, as Greg was mentioning. We're not investing in emerging markets where you have unstable areas where you're worried about it. So the companies we're invested in are from stable places, but we're more concerned about where the revenue is coming from rather than where it's headquartered.
Yeah. Where can we get more information?
Go to Altrius Funds, www.altriusfunds.com, and you can also take a look at our prospectus, and the ticker is DIVD, DIVD.
All right, thank you both for joining us at MarketSite, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.